So, just an update on Ulta Beauty. It is not an undervalued stock, and the reason why is because the average or normal earnings are expensive compared to the price. And the way I arrived at that conclusion is I tracked all the earnings for the past 10 years from 2015 to 2024 and the shares, the number of issued shares for each of those years. And with those two values, I calculated the earnings per share for each year. And that will give you a more nuanced and more detailed answer for what earnings are because they're diluted and adjusted for the changes in the number of shares outstanding. And when you look at the average earnings for the 5 and 10 year averages, the average earnings per share, you get $12.1 per share for the 10-year average and $17 per share for the 5-year average. Now, when you see the price here and you have those numbers, say 12.1 was the 10, you divide by the price, the current price at 377 rounded, and that is the yield of earnings on the price. You could call this like a coupon bond paying 3%. And that in this interest rate environment of 5% interest rates is terrible. To look at the 5-year earnings, which in this case is higher because the company experienced earnings growth, you would do 17 over 377, and that'll give you a 4.5% yield. So, meaning each year the company makes 4.5 cents on the dollar for each, I guess, market value. Like for every dollar of market price or market value that the company has, it makes 4.5 cents each year. And in an environment where you can get something risk-free for 5, even more with US Treasury bills, this is insufficient. And to look at the most recent earnings per share, this number would go from 17 to 26. That's the earnings per share in the year 2024. This gets you at 7%. That is higher than the current risk-free interest rate, but definitely not substantially higher. And it's not where not Warren Buffett, but Graham and Dodd define an investment with the margin of safety that you need to have. And what the margin of safety means is that if something goes wrong, or if you're wrong as an investor, which you most likely are to some extent, then you do not overpay for the stock. And so that means you underpay. That means you make sure that your stock is selling, 30 to 50% lower than what it is truly worth. And this number does not represent that. This number is more like, let's see, if I were to give a conservative value of neutral PE like 12 and 377 divided by the intrinsic value, which is an estimate with this certain PE of 312, that's a 21% appreciation in price, and that is not something to write home about. And that is using a conservative, neutral outlook. If I wanted to use something less conservative, then this number would be, going back to the least conservative, this is actually less than the price. So, meaning, if you had a neutral outlook on Ulta Beauty at this point, nothing good nor bad, they will just do business as usual, you would see the stock inflated by 20%. 20% overvalued, not undervalued. So that was a mistake. I'm sorry. if I were to use a less conservative outlook, say I'm, moderately optimistic at 15 price over earnings, I would see an undervalued uh, appreciation potential of 3%. That is pathetic. And, even in this day and age, sorry, not this day and age, but in this period of time with a lot of expensive stocks, 3.4% on a common stock investment is negligible. And I think that, with the headlines, I first heard about this stock in a Wall Street Journal article. If I can find it. Basically, they were saying that Berkshire Hathaway is buying up shares of Ulta Beauty, and they discussed, there we go, they discussed, should you buy Ulta Beauty? And, it made me think, okay, Warren Buffett was a pupil of Graham and Dodd, the people who wrote this book. Probably knows a thing or two. But the reality is that it's even warned in this book, written by his mentors. The fault, let me find the correct page. So this is the 6th edition. It is on page 709. The size of his investment unit is more likely to induce the large investor to concentrate on the popular and active issues. To some extent, therefore, he is handicapped in the application of the undervalued security technique. However, we imagine that a more serious obstacle thereto will be found in his preferences and prejudices. So, what that means is, for Warren Buffett, who has billions and billions and billions of dollars set aside for an investment, he has to focus on the most active and popular stocks like Ulta Beauty. Ulta Beauty is very relatively popular, $18 billion market cap, very recognizable, seasoned business. And he has to focus on that because all billions and billions of dollars is riding on the stocks he's buying. So he has to buy the more safe stocks, which are tending to be the larger in size, more seasoned, more longevity, more stability, like Ulta Beauty. The other problem is if he were to find a stock that had a $300 million market cap, well, his investment in it would double, would double the stock price because he has $300 million to invest. So if he buys a $300 million stock, the market cap would double to $600 million. And I don't know if the SEC would enjoy that. And overall, I think, if you had billions and billions of dollars like Warren Buffett, anyone watching this video, Ulta Beauty may actually be something to buy. But as for the average individual, average American, Ulta Beauty is overvalued. It's a popular active issue, so you're not going to find a lot of undervalued stocks in that sphere. You will sometimes. And I think the investor is better off waiting and, continuing to look, but waiting in a large cash position to pounce at the next opportunity. And that may come sooner or later. Nobody knows when the markets are going to start reacting to the long period of high interest rates. And I would never advise you when or how to time the market. So what you should be doing, what I'm going to be continuing to do, is looking through this great website, FinViz, which has hundreds of stock symbols. I don't pay attention to most of the technical and chart signals, but I do look at some of their numbers, their fundamentals with a grain of salt. And all of these companies, I check macro trends if they're a stable company, stable business, and I go from there. If it's a company that has a long-term value where their average or normal earnings are substantially above the current price. The intrinsic value is maybe even double the current price. That is something that you would invest in. I would invest in. And I encourage whoever's watching to do that, or to follow along as I continue posting videos about new finds. But in short, Ulta Beauty is not an investment. You could call it a speculation, but unfortunately, it's not an investment.